conspiracy anymore. Jack Sherman said it, and he's, the guy that runs the Silver Eagle program. So if mints become inefficient or start doing things in a self-serving manner, if the mints around the world say, you know what, let's take care of our people in Australia and UK and South Africa and Austria instead of sending it to the United States, like that, you can shut the light off on supply, man. And it's true.
Now has demonstrated it's now first breaking out, and would not surprise me that while they both go up over time, that silver from here to, say, the end of the year actually has more of a percentage gain than gold.
Everyone's going to get hurt. And I've talked for years, China does have a huge debt problem. But understand what China did building up that debt over the years. What did they do? They built railroads. They built airports. They built cities. They built infrastructure. While the West, we ate our seed corn. So if the system goes down, or when the system goes down, the West is going to be left basically sucking their thumb, and the East is going to be left with infrastructure.
In today's weekly recap, 3 financial experts, Peter Grandich, Andy Schectman, and Bill Holter, discuss recent developments in the world of precious metals. They share insights on how global topics such as the actions of the BRICS nations and rising inflation are impacting gold and silver markets. The BRICS group, made up of Brazil, Russia, India, China, and South Africa, is exploring ways to reduce reliance on the US dollar, which could shift global financial power. These changes could make precious metals more appealing as safe investments as people look to protect their money in uncertain economic times. The experts also provide their forecasts for gold and silver, predicting that prices may increase due to current economic pressures. Inflation, which reduces the purchasing power of money, makes assets like gold and silver attractive because they tend to hold their value over time. Grandich, Schectman, and Holter agree that as inflation continues to challenge economies worldwide, both gold and silver could see rising demand. They suggest that these metals might become even more valuable if economic uncertainty persists, making them an important choice for long-term security. We watched hours of footage to bring you the best clips so you don't have to. Now smash the subscribe button, turn on notifications, and hit the like button. Enjoy the episode.
It doesn't come from companies like mine or Money Metals or SD or JM it doesn't. Comes from the handful of primary distributors, which are the market makers. So if you're a market maker and you're spending hundreds of millions of dollars on product from the UK mint, from the Australian mint, from the US mint, from the Canadian mint, all these mint, and business is normal. If it's slow, they get hammered when the back dates are going for less than the current issues are, and they have to buy the current issues when no one wants them because they can buy cheaper on the back date. So go to a position where, like we've seen over the last several years, where everything's disappearing and the mints are out of product. Sorry, nothing for 2 months for you guys. So the primary distributors say, well, if we're running out of supply and we have more demand than we have supply, better jack up the premium because we're not going to get anything for 2 months. I don't blame them. That's what business is. Well, we have to pass that on at the same time. If we're paying more money to buy them from the primary distributors, for the 1 or 2 people that decide to sell, yeah, they'll get a much higher premium on the sell side. Just understand, this is not a magic number. This is a number that is based off supply demand in a forward-thinking way. Yeah, getting products shut off for a month and a half, and things are crazy. Premiums are going to jack up. And when it sells out, good luck getting product because no one goes back into dollars. Why would they? The secondary market becomes absent of any product. The primary distributors are out of product. The mints aren't making anything for 6 weeks. That's how it happens. And, during the pandemic, they were the model of inefficiency. You want to talk conspiracy, I would urge everyone to watch Bixweir's 3-part video with Jack Sherman from the U.S. Mint, where Jack, who developed the Eagle program since '86, said he was told by his superiors to only print as many or mint as many Silver Eagles as would not create a public outcry. Well, the outcry got so loud, in large part due to all of us yelling in Bix's interview. Who knows what happened to that guy, but he said it, blew me away. He said, the primary distributors came to us second half of the year, asked for 36 million. We only gave them 12. The law says they have to make as many silver eagles as is demanded by the public. They broke the law willingly, knowingly. Why? Are they stockpiling silver because they know it's strategic, not industrial? Are they stockpiling because they know we've exhausted our own stockpile? But when you hear these things, take off your tinfoil hat. It's not conspiracy anymore. Jack Sermon said it, and he's, the guy that runs the Silver Eagle program. So if mints become inefficient or start doing things in a self-serving manner, if the mints around the world say, you know what, let's take care of our people in Australia and UK and South Africa and Austria instead of sending it to the United States, like that, you can shut the light off on supply, man. And it's true. That's it. That's how fast it happens. And that's why, when I sit here for 6 months telling everyone how cheap everything is and how abundant it is, in the back of my head, I hear people saying, yeah, right. Guy's just trying to talk his book. No, I'm not. And then again, you've been with me long enough to know that I'm sincere on that. And you've seen both sides of that coin. Mm-hmm. I think the setup is far greater than anything we saw during the pandemic, because the setup right now comes along with an awakening of that elephant. You and I and everyone watching this, were the pimple on the elephant's back. The elephant will wake up when a big bank gets bailed in or gated or something happens that none of us even have on a radar screen, God forbid. But I do think it's the time to realize that this may be the best value that we've had in a long, long time, because who knows what tomorrow brings. And I can't imagine this being a peaceful transition or a peaceful election. I just can't. So I guess we'll see. I hope I'm wrong, but that would translate into difficulty for everyone, including the dealers, getting product at a reasonable rate in a reasonable amount of time.
In today's news recap, silver soars as gold hits yet another record high. Precious metal prices stormed higher yesterday as investors flocked to safe places to store their money amid uncertainty over the U.S. election and tensions in the Middle East. Gold hit a record high of $2,740 an ounce, and silver topped $34 an ounce for the first time since 2012. Gold has risen more than 30% this year, while silver is up 43%. The rise in precious metal prices has been driven by expectations of further interest rate cuts by central banks around the world, as well as worries about the U.S. election result and conflict in the Middle East. The U.S. Federal Reserve and the Bank of England are widely expected to cut rates again early next month, while the European Central Bank did so last week. The People's Bank of China has also got in on the act, cutting rates yesterday in a bid to revive the world's second largest economy. Lower interest rates tend to boost the gold price because it becomes relatively more attractive to investors. Bullion is also seen as a safe asset in uncertain times. With 2 weeks to go until polling day, the U.S. election looks to be on a knife edge, while investors are also nervous about developments in the Middle East. The outlook for gold is quite bullish, said Joni Teves, a strategist at UBS, who is tipping it to hit $3,000 next year. He added, there are a lot of risks around the next few weeks with the U.S. election coming up. We could be in for some choppy price action. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
21 in our planning group, especially where most people are just general market people, they're not gold oriented. And I said, listen, for pure capital gains, I think gold's going to outperform both stocks and bonds. And they're like, especially bonds. How could you tell me, And I just feel through 2024 was my line that gold would outperform both of them. And it has. And what's interesting, when this year began again, I said, for the year on its own, gold will outperform stocks. And what's really amazing is, I get these weird emails. I guess some people don't have much else to do in life. Elijah, God bless them. And, how could you tell people to put everything in gold and all? And yet, they all rave about Bitcoin, and they rave about a person that tells them not even to spread the money among different cryptocurrencies, just put it all in Bitcoin. So all over the media, there's people telling you Bitcoin's going to the moon, Bitcoin's going to 1 million, put it all in Bitcoin, Bitcoin. And yet I use something that worked for a couple thousand years. Central banks are buying it like there's no tomorrow. They're not buying Bitcoin, they're buying gold. And yet I'm the crazy one. So it's okay. At the end of the day, it was the right move. I think a lot of the movement was based on what was transpiring with the BRICS. Now we go into those meetings next week. We've already seen a lot of news come out. It's all bullish for those of us who've been big believers in the BRICS. I've been one of them. I think I'd be hard to believe there was somebody much more of a believer than I. And there tends to be sometime buy the rumor, sell the news. So there's always that possibility. And what I would just tell people, and nobody knows the future but Almighty God, is we know we'll be in a bull market if it's a sharp sell-off. And everybody goes, how's that? Bull markets always have sharp sell-off corrections. It's when things just trickle and goes down and goes back a little. You think it's turning, it goes down again. That's a bear market. And that the goal isn't anything near that. So it wouldn't surprise me. It wouldn't change my long-term thoughts. But it's hard to talk about resistance because we're at levels we've never been before. The only resistance I think somebody would talk about is a psychological number, which would be 3,000. The thing to talk about, which is something that Pete Grandich has not spent decades talking about, and the silver bugs used to get mad because I always felt it was like kissing your sister compared to owning gold, is that silver now has demonstrated it's now first breaking out, and would not surprise me that while they both go up over time, that silver from here to, say, the end of the year actually has more of a percentage gain than gold. I think one of the big stories that's come out in that, besides the tremendous short position, and there is that we're learning more and more two key things for silver. One, the surprising industrial use militarily wise. That's not something that's been discussed till recently, until we start to realize how much silver is being used in military weapons and things. But then also that China has now been going around the world buying silver directly from miners. And these all just bode well. So other than healthy, normal consolidation and correction, both of them's least resistance is higher, not lower.
In today's episode, Rick Rule, a well-known resource investor, emphasizes the importance of gold and silver as essential tools to preserve wealth, especially during times of economic uncertainty. He believes the rising interest in these metals is driven by growing concerns about inflation and the weakening purchasing power of major currencies like the US dollar. Rule highlights that even though central banks have been increasing their gold reserves, retail investors have yet to fully engage with the gold market.
They want to take people's wealth. They want to crash the system and get the population to beg for help. And that help is going to be a central bank digital currency. It's the way to get the population to ask or even demand to give up their banking, personal finance privacy. That's what central bank digital currency does. If we get to that point, or when we get to that point, I don't think the central bank digital currencies are going to last very long. I mean, you may only see them last 6 months, and a true Mother Nature reset takeover where people will not accept anything that's not backed by something real. That's what the BRICS is all about, is they want to trade something real for something real. And you've got the WEF that wants to slide from the dollar to another fiat non-bank but digital currency. And the reason behind that is they want to be able to view every stick of gum that you purchase, and they'll be able to do that. First off, Russia absolutely understands that gold is the Achilles tendon to the dollar. I mean, you can go back to 2004 and you'll find a picture of Vladimir Putin holding up a 400-ounce bar with a big grin on his face. They've known all along that the Achilles tendon is gold. And what they're doing by making this announcement last Friday is they're putting further pressure on the gold shorts because they're expanding their purchases into, like you said, platinum, palladium, silver, um, and that is going to directly conflict with the shorts in those markets. And those markets are much, much smaller than gold. Silver is probably the smallest. Um, that if they go into the marketplace and say, buy me, pick a number, $50 million worth of silver. Silver's already in a huge deficit. And what they're doing by announcing, and then if they actually do start buying, is they're going to tip the scales, and that will lead directly to a failure to deliver. And that pulls the pants down on the West and shows that the whole thing is a fraud. With your question, they've for years have complained about the U.S. dollar system. They're going to be a number one, number two player in the BRICS, and obviously calling the shots. So I think that's going to be the role that they play. They do understand that they can't directly confront, and Russia understands this too, that they can't directly confront the U.S. From a financial standpoint, simply because those would be fighting words. And I don't think they want war. I think they just want free and fair trade settlement. They just want to do business. You have to understand the mindset of the Chinese, and I think Vladimir Putin has this same mindset, that they know mathematically the U.S. is going to collapse under its own weight. So they don't want to be seen publicly as the cause for the collapse. So that's why they're slowly and methodically pushing the BRICS forward. Don't think they're going to push the U.S. over the edge. It's just going to happen on its own, simply because the math no longer works. When I say math, I'm talking about, the simplest one is the amount of interest that's paid on the debt. But just look at the whole system. The whole system is, it's certainly over leveraged. And I do believe that if we're not we're extremely close to debt saturation. And if the credit card numbers that were released earlier this week or late last week, if those numbers are correct, it shows you the consumers tapped out. The whole system is one big debt bomb.
What do you think about Peter Grandich's insights on silver's recent breakout and the role of BRICS nations in reshaping global markets? Peter pointed out that silver's surge, though often anticipated, is now backed by stronger fundamentals than before. With growing industrial and military demand, along with China's recent efforts to buy silver directly from mining sources, he believes the silver market is well positioned for sustained growth. He also highlighted the critical role that BRICS nations, Brazil, Russia, India, China, and South Africa, are playing in transforming global trade. As these countries move away from the U.S. dollar, it could have lasting impacts on both gold and silver prices. In our discussion, we also heard from Andy Schectman and Bill Holter, who added their perspectives on precious metals and the shifting global economy. Together, these experts emphasize that the combined forces of rising inflation and evolving international trade systems could drive more demand for gold and silver as reliable stores of value. Let us know your thoughts in the comments below, and don't forget to check out our next video. We think it's the perfect follow-up to today's insights. Thanks for watching. We'll see you on the other side.